What's up, guys? Philip at Trade Genius. All right, Grayscale Investments, they're the ones behind the GBTC fund, where you can actually buy BTC as a fund, like a stock on the OTC markets. It's available on all the different trading platforms, Ameritrade, Schwab, things like that. They're the ones behind that fund. So they came out with a marketing campaign called Drop Gold, basically drop gold for Bitcoin as a store of value. So wanted to get into that a little bit because a little controversial, saw some reaction on social media and stuff like that. So wanted to dive into that and take a look at GBTC and how that works. So let's dive into this video and check that out.
Trade Genius.
All right, guys, so this is the website dropgold.com. So this is Grayscale's website for this marketing campaign. They want you to invest in their GBTC fund. We'll get to that in a minute. They've even created a commercial ad spot. Check this out.
Why did you invest in gold? Are you living in the past? In a digital world, gold shouldn't weigh down your portfolio. You see where things are going. Digital currencies like Bitcoin are the future. They're secure, borderless, and unlike gold, they actually have utility. Leave the pack behind. It's time to drop gold. Go digital. Go Grayscale.
All right, so yeah, that's probably going to stir up a response, but that's probably, that's a good thing for a marketing campaign, right? So what I wanted to do is I wanted to talk a little bit about Grayscale Bitcoin Trust. If you guys aren't familiar with it, you can look it up like a stock. So, you can look it up on any trading platform. In fact, you can look it up on TradingView if you type in GBTC, okay? And let's make this bigger. As you will see, it tracks Bitcoin. And actually, during the drop, when Bitcoin was holding that 6,000 level, it was actually trending down, and actually Bitcoin caught down to it. So it does have some interesting relationships, correlations, but by and large, it moves with Bitcoin. Matters of percentages could be a little bit different, but by and large, the moves are the same. So it's been a way, and they've been around since 2015, essentially, and it's been a way for you to be exposed to Bitcoin in, say, certain 401ks or IRAs, especially if they're self-managed. And so it's been nice in that regard. But there are a few things that you need to be aware of when thinking about maybe allocating into GBTC. As far as the GBTC versus gold, drop gold, get Bitcoin, there's King Dollar, gold, like Emperor Gold, and then the Crown Prince is like Bitcoin. Gold and Bitcoin are both stores of value. And, gold's been around for 5,000 plus years serving that purpose, and it's just not going to go away overnight. The reason why, it's kind of like Emperor to the Crown Prince is because gold's market cap is north of $8 trillion. Okay, so that's not going anywhere anytime soon. Now, does Bitcoin have a tremendous amount of growth potential compared to gold? Yeah, and that's very attractive. You've seen the percentage gains. We've talked about that immensely on this channel, about all the percentage gains that can be had especially when we're in these periods of post bear cycles, right? That's when you see your biggest gains, and you're not going to see that investing the same amount into gold. The other thing is that gold, a lot of complaints about the suppression of price, gold and silver, right? Paper markets. And yes, Bitcoin has paper markets, futures, but what's the difference? The difference is that you have an open ledger on Bitcoin. So not only do you know how many are left to mine, you know where they're residing on the blockchain via wallets. Now, we don't necessarily know who owns the wallets, but you know how many wallets there are, how many Bitcoins are in wallets, which wallets hold a lot, which ones hold a little. That's all open ledger stuff. With gold, don't really know. Emerging markets want to call in, get their gold out of like these big sovereign vaults. They're being told no, So it's hard to say with gold actually who has what and where is it all and how much more is there left. So, those are some key differences, but we're just getting into the digital era with mankind, right? So it would make sense that we have a digital store of value, a digital version of gold, but this is in its infancy. So you're realistically not going to be dumping gold for Bitcoin overnight. That's just not going to happen. But they're both good. They both have a purpose, and they're both worthy of portfolio allocation. All right. So that being said, if we take a look at GBTC, you notice again it follows Bitcoin's price, but What you want to be aware of, there's some key things you need to be aware of. One is the premium on GBTC, okay? There's actually a premium calculator that you can go see. If you Google GBTC premium, one of the first couple of links that'll pop up is the one from neotechdevs.com. And they will show you this exactly right here, premium 28.29%. So that's how much more you're going to pay to have that exposure to Bitcoin through the GBTC Bitcoin Trust. So, and I can show you the chart. They have a chart that's historical. If you go to the year, what you'll see is that premium actually, the higher Bitcoin goes in price, the higher the premium. I mean, if you look back May of last year where prices were higher, you're talking about a 67% premium, and it was over 90% of the height of the market. So that's great if you're buying low and premiums down at these levels, and you're buying low and you're selling high. You're going to capture a lot of more upside than you would, let's say, just spot Bitcoin for that example. But it's bad if you were buying higher and then having to get out and sell lower. So just keep that in mind. There's a big premium, and it typically fluctuates with price. Higher the price, higher the premium. So that's one negative. The other thing is, if you take a look at how it's structured, and we can take a look at this. So you're basically, their argument is you're going to pay the premium because then you don't have to deal with storing the Bitcoin, right? You don't have to deal with a hardware wallet, making sure that you don't lose the seed, things like that. So that's basically the price you pay to just simply allocate it like a stock, buy it like a stock. Yes, there's Bitcoin behind those shares. They are physically backed. They own 1.2% of the entire Bitcoin circulating supply. They have over $1 billion under management. So that's Grayscale investment. But you have to keep in mind, is that going to be worth it for you? Now, sometimes if you want your 401k or IRA and you're able to directly manage OTC type stocks in those, this is the only way you'll have exposure to that. But just keep in mind that it's not the same as outright buying Bitcoin with your dollars, and having actual Bitcoin, like say on an exchange like Kraken or Coinbase or Gemini. All right. Okay, so just to kind of give you guys some details, this is right off the Drop Gold website. They have a FAQ, you can check it out. But what is GBTC? It's the symbol under which shares of Grayscale Bitcoin Trust are publicly quoted on the OTCQX market. And again, that market is available to all major trading platforms. The top tier marketplace operated by OTC Markets. So that's how they get away with operating away from the SEC. Because, as you know, the Bitcoin ETF is still under SEC review. That hasn't come to pass. So by going to the OTC markets, they got around that. Now, as I said, shares of GBTC can be purchased and sold under the symbol GBTC on most brokerage platforms, including Ally Invest, Charles Schwab, E-Trade, Fidelity, Interactive Brokers, TD Ameritrade, TradeStation, and Vanguard. So readily available as a fund for Bitcoin. All right, let's jump to the Grayscale Bitcoin Trust fees. And this is important. Similar to other investment products, Grayscale Bitcoin Trust charges an annual administration fee of 2%, which accrues daily in Bitcoin. Since shares of Grayscale Bitcoin Trust are solely and passively invested in Bitcoin, the amount of Bitcoin underlying each share will decline over time by the annual fee. All right, so that's important to know. So the amount of Bitcoin backing those shares declines or degrades over time. So it's fine if you want a short-term exposure, like let's say you're bullish on Bitcoin going into the halving, and you have the ability to allocate this in your trading portfolio or certain 401ks and IRAs. If you're able to direct those, you can do that. Short term, that's fine. You want to get positioned for the next move up. Long term, you're going to want to be able to hold Bitcoin yourself, or at least hold it in a way that isn't subject to that kind of fee and degradation over time. All right, so that's key to know. Ultimately, at the end of the day, if you don't own the keys to a Bitcoin, then you're not really the custodian. They'll say no keys, no Bitcoin. So again, you're trusting them with the custodianship of that exposure. So all I'm saying, long term, you really want to have, at the end of the day, control of your own keys on Bitcoin. But in certain situations, short term, this can be useful exposure. Just keep in mind, those premiums that you're paying. So what do you guys think? You think that time to dump gold for Bitcoin? I told you what I thought. I think there's a place for both in the portfolio. Let me know what you guys think down below in the comments. I'd like to hear your thoughts on that and this marketing campaign. All right, guys, that's it for this video. Please hit like and subscribe. We appreciate you guys watching our videos. I'll see you on the next one. Take care. Bye.
Trade Genius.